All right. So I invite you, if you have access to your numbers, I know you may not have your numbers before you, but if you do have access to your numbers, I invite you to grab them. If you have access to QuickBooks or Wave account, or if you have last year's tax return, or if you have some kind of financial statements that shows what your numbers are for the business, I invite you to grab it, right? To take what you are learning today and in real time, run these numbers for your own business, right? And run these, and we're going to look at some metrics and some KPIs and see how what those are for your business, right? But if you don't have any of that, and for the sake of just a general discussion, we are going to be discussing a fictitious business called Bright Path Consulting. It's owned by Maya Chen, and it's an HR consulting for Atlanta. She has 8 staff members, 5 consultants, 2 project coordinators, and 1 part-time bookkeeper. This is the 4th year of operations, and she has a mixed revenue model. So 60% of her revenue is consistent monthly retainer clients. Right? So each month is that predictable stream of revenue. Each client knows what they're going to be billed each month. So that way she knows what's coming into her business each month from retainer clients. That's 60% of her. 40% is from one-off projects. Right? So that's not as predictable, but it is still a substantial part of her business model. So I invite you to think about your different revenue streams. Is it all coming from one type of product or service, or do you have a mix? And what is that mix, and what does that mean to you, right? And what does that mean as far as growth? For Bright Path Consulting, her question is, she had a good year, but she still feels tight. So did she really have a good year? Her calendar has been filled. She's booked and busy. Clients are renewed. New projects came in, but she still wants to know, where did the money go? That's the question I usually get all the time. And that's the question that she has, and we are posing to us today as a form in discussion forum. The financials will tell us answers to those questions. Income statement. What is it and what it does? I dropped the session notes and the handout in the chat. That could give you a reference of some of the definitions that we'll go through today. It also gives you her P&L for year 4, as well as a comparative to year 3. Also has some other kind of homework or things that you can do on your own. But what does the income statement or the P&L show? It shows revenue earned. It shows costs incurred. That's an accounting term. It shows profit and loss, right? For a specific period of time. What it answers, did my business actually make money, period. It's a scorecard of business performance over time. It will not show you cash in the bank. It will not show you what you own versus what you owe, assets versus liabilities. You're not going to get that from the P&L. It will not show you if you can make payroll next week. Those are all different documents, but the P&L is going to show you profitability. You can use it to estimate what your tax is going to be. You can use it to estimate what your quarterly taxes should pay into it. You can use it to determine profitability. Banks, financial institutions look at that as a measure of performance. So yeah, it's important to know what the income statement shows and what it does not show. Any questions or comments?